G. So this is your teacher Sir Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from O-Level Accounting 7707 or IGCSE 0452. So O-Level Accounting 7707, and the topic is incomplete records. So we are going to solve a question from accounts from incomplete records, that is conversion into double entry. And that question has come, this question has come in February, March 21, 22. 0452. So obviously, this question belongs to IGCSE. That's why it is being written that it is February, March 21, 22, 0452. But to be honestly speaking, as I discussed earlier with you, that February, March variant is at least our variant in any case. Why, sir? Because our variant, which comes in our country or which comes in this region 4, zone 4, that is the variant 1, 2, and 2, 2. And the February March variant is always 1, 2, and 2, 2. So that's why it means that even it belongs to IGCSE, it is more close to this particular region of the world. So February, March 21, 22, 0452, and the question is in front of you. Myra opened a shop on 1st January 2020. It means there will be no opening inventory, no opening trade receivable, no opening trade payable because the business has just started. She provided the following trading information: gross margin 40%, purchase price $70 per unit, carriage inward $2 per unit. Always remember that purchase price and carriage inward is basically interrelated with each other. They are part of the cost of the particular unit, because on every unit on which is purchased for $70, you have to pay carriage inward of $2. So it means that the cost price of each unit is 72. Inventory 130 units at 31st December. It is given in units. Calculate the cost of Myra's inventory at 31st December. So let's calculate the cost of Myra's inventory first. That is the cost of closing inventory. That is going to be 130 multiplied by 72, not 70. That is multiplied by 72. Why, sir? Because 130 is the closing units, ending inventory. And the cost per unit for each unit is not 70, it is 72, because you have to pay carriage to bring the goods, the same goods into the factory, which has also been incurred on the closing inventory, which is leftover inventory at the end of the year. So what is the amount? That is going to be 130 into 72 is 9360. So closing inventory is going to be 9360. Okay. Now let's move on. Myra's has not kept a full set of accounting records, but provided the following information. All sales were made on cash terms. The sales for the first year were, for the first 2 months, 10,800 each month. For the next 8 months, 12,000. Means 12,000 into 8, that is 96,000 actually. 10,200 into 2, that is 21,600 actually. For the last 2 months, it is 16,200 each month. So we have to multiply it by 2. Total sales is basically on cash, and the 12-month period is given, like first 2, then 8, then 2. 2 plus 8, 10, 10 plus 2, 12 months. You will calculate the amount of total sales easily by multiplying each month sales with the number of months. During the year, Myra purchased 1,400 units. Carriage was paid on these units. Always remember that carriage was paid on these units. 1,400 is the purchases multiplied by 72, because the each unit cost is not 70, including the carriage inward. It will become 72. Myra took goods from the business during the year. No record was kept of these drawings. So goods drawings are not, there is also goods drawing, but it is not yet recorded, or we have supposed to find it in our question. So as discussed earlier with you, that whenever there is margin or markup is given in the question, you know that we can calculate the gross profit directly. So margin is given in this question, that is 40%. So we can calculate the gross profit directly. So first of all, we need to calculate the, this is shop income statement or whatever, let me see. Okay, Myra's income statement or just a trading count, you can type it down. So I will go with statement of profit and loss, because this is really been called now as statement of profit and loss. And I will go with the dollar sign. So I will write sales over here or revenue. So let me calculate the revenue. Revenue is going to be how much? Can you please help me out? 10,800 plus 10,800 plus 12,000 into 8, 96,000 and plus 16,200 plus 16,200, right? 10,800 plus 10,800 or multiply by 2. Then 12,000 into 8 is 96,000 plus 16,200 plus 16,200. You will get the total amount of sales revenue. So please, if you can tell me what is the amount of sales. Let me calculate it again. Actually, 10,800 into 2, you can do that. 10,800 into 2, that is 21,600 plus 12,000 each month for the next 8 months. That is 96,000. And then I can add 16,200 for 2 months. So the total amount of sales is 1,50,000. 1,50,000 less cost of sales. We used to subtract. Normally we used to have an opening inventory, but as the business has newly started, there is no opening inventory. So we'll go for purchases, and then we will also add carriage inward, and then we will less goods drawing, because good drawing will be subtracted from this, and then we will subtract less closing inventory, which we have already calculated actually. That is 9360. We have already done that. So closing inventory is 9360, which needs to be subtracted to get the amount of cost of sales. Now I can calculate the gross profit directly because it is given in the question that 40% is the gross margin. So the gross profit is going to be 1,50,000 multiplied by 40%. That is going to be 60,000. 1,50,000 minus 60,000 is going to be 90,000. So 90,000 is going to be the cost of sales. Now we will go reverse. We know that our purchases, which is given in the question, that is 1,400 units. So 1,400 units are purchases, and on each unit the price is 70. So 1,400 into 70. What will be the answer? That will be the purchases. 1,400 into 70. That is 98,000. Then let me write also so that it must be very clear in your mind. Then 14 carriage inward will also be paid on the same units. 1,400 into 2, that is 2,800. And then we have to subtract the goods drawing. Then the amount is not known to us actually. So now we'll go reverse actually to find the closing inventory. How? 150,000 is the amount of sales less gross profit. Gross profit we have calculated directly by multiplying the gross margin with sales, 60,000. 150 minus 60, 90,000 is the cost of sales. Now I will go reverse. 90,000 plus 9360 is going to be 99360. And I will subtract or take a difference from 98,000 plus, let's calculate like that, 98,000 plus 2,800, that is 1,08,000, right? And the total of cost of sales and closing inventory, we will subtract minus 99,360. So 1,440 is going to be the drawings. 1,440 is going to be the goods drawing, which is the missing figure, and we have found that by going reverse. How? 90,000 plus 9360 is 99,360. 98,000 plus 2,800 is 1,08,800 minus 99,360. You will get the amount of goods drawing, that is 1,440. So this is what the examiner has asked us to calculate, and we are done with that. But remember that any amount can be a missing figure, like closing inventory can be a missing figure, like purchases can be a missing figure through this question. So both is a possibility. So we have done with the income statement. Now let's see Okay, this is the 8 marks. It's a part of a question, February, March 21, 23. And we have solved that portion quite easily. This question I have given to you for homework actually, May, June 15, 21, that you have to calculate the trade receivable balance and trade payable balance is given, right? And you have to prepare the purchase ledger control account to find credit purchases, sale ledger control account to find credit sales. And then payment for February is given. Opening closing inventory, it is given. Purchases is given already. General expense owing is given to general expenses. Wages is given 7,900 plus 1,600 ending and 2,300 will be subtracted. So 7,900 plus 1,600 minus 2,300, you will get the amount of expenses to be written in the income statement. Non-current asset is 18,000 and 17,200. So it clearly mentioned that 800 is going to be the depreciation on non-current assets. Wages are given 15,200. You can prepare income statement very, very easily. It's quite simple to prepare that. If cash sales is not given, it means that credit sales are going to be the total sales, but you have to write discount allowed in the expenses. You have to add gross profit, discount received in the gross profit. You have to subtract purchase return from purchases. Achha, cash sales is given, okay. Then you have to add cash sales to find the total amount of sales along with credit sales. Bad debts will also be written under the heading of expenses, right? Then there is check dishonor, that's doesn't matter. It will come in the sale ledger control account. But if sales return would have been given, it should have been subtracted from the sales in the income statement, in the statement of profit and loss. Same is the case with purchase return will be subtracted. Again, it will be written in PLCA, but it will also be subtracted from purchases. Discount allowed will be recorded under the heading of expenses. Discount received will be added in gross profit, and bad debts is also written under the heading of expenses because accounting is based upon dual aspect concept. Every transaction has two aspects, one on the debit side and one on the credit side. So I've already given it as homework to you. So hopefully you are done with that. And this question you have already done. You need to do this question also, that is May, June 10, 21, right? And one question is from May, June 11. May, June 11, that is also a part of the